Okay, today we have a lot of new people in the class this year, so we're trying to go through and find ways to get people accessibility to data, and there's an awful lot of data out there. So when you're doing a stock report, you're looking at your sector, you want to know news, there's no excuse not to have a lot of things ready at all times. So I have a couple of, well, actually about 7 or 8 of my more favorite ones. For example, finance.yahoo.com, and you enter the ticker. We're going to look at Apple across the board here. You go to Apple, and you can see quite a bit of information here. You see the closing price clearly. The market's closed right now, so we see that it closed at 498.22. You see the beta of the stock, how much it moves with the market. If it's more than 1, it's more volatile than the market. If it's less than 1, it's less volatile. The PE ratio, we've talked about in class several times. Earnings per share, dividend and dividend yield, the price range, etc. You can also get different charts if you want to look back, see what it's looked like over a long time period. We can see, and I guess it was in a race, but you can see the chart there that shows it's gone up fairly dramatically after 2000. We can also look at the same exact thing through Bloomberg.com. It's a free service here. If you go to Bloomberg, type in Apple, I already pulled it up. Here's the stock chart, and we can look at different time periods. There's the 1 year, 1 month, etc. We can also get some of the key statistics, PE ratios, PE ratio relative to the S&P. I think that's a big one that we should look at a little more in our class, how it compares relative to the industry, etc. Earnings per share, we already mentioned. Average volume, price to book, which is what some people call market to book. The MRQ is most recent quarter. You see there, MRQ is the most recent quarter's book value. Price to sales, TTM, is trailing 12 months. One other that we want to talk about a little is the PEG ratio. You see up here the PEG ratio. That's PE divided by the growth rate. So that's one that we don't often talk about in class. We probably should talk about it a little more. Other places you can go. Morningstar. If you wanted to go to Morningstar, you can get the same type information. It's all roughly the same. Here you get analyst report as well if you get the premium, which we do at the library. You can get dividends information, when they pay dividends, how much their dividends are, and again the key stats. Very similar to before. What this one does, and I like this a little better than the others in that regard, it gives the industry average as well. So you can quickly say, okay, the PE ratio of 12 is slightly less, although about the same as the industry average of 13. So that's Morningstar, highly recommended. Probably if you want the easiest one to look at, Wolfram Alpha. Wolfram Alpha does an awful lot. All you do is just go Wolfram Alpha, type in the ticker, and it will give you a very short, quick report to the point. A little more mathematical than some of the others, based on some ideas that the future is likely to be a repetition of the past. It talks about volatility, average daily return, average daily volatility, annual return, annual volatility, and you can go over a long time period. If you want to look at the average annual volatility over the last 10 years, and it's working here for the last 10 years, you see the average S&P volatility has been about 23%, and Apple has been significantly more volatile at 36%. What you don't know there, or don't see there, is how much it moves together. So we can do that down below with the correlation coefficient, and you see that Apple with the S&P 500 doesn't move very much together, not nearly as much as you would think over the 10-year time period. You can also look at projections. You can look out, see beta, calculate beta over any time period you want. Let me get rid of this here. Let me get rid of that and that. So right now we're looking over the last 5 years. Beta was 0.81. If we look over the last year, you're going to see beta was 1.09. If you look over the last 10 years, you're going to see, and it's working, you're going to see beta 0.88. So it does matter which time period you look at, and that's sort of one reason why these things are all different if you look at different companies. Here we're looking at Google, and let's just enter, this is google.finance.com. and you see the thing that's nice. All of these have things that are very nice about it. The thing that I like particularly about this is you can get news of the company and it lists it here. So you can see, for instance, what's the market reaction to, let's see, S, whatever S was. S was down here. Apple, I don't have any idea that is related. It probably just happened to move in that date. But you see all of these. You can click through to them and you can get the news information. So highly recommended for news. It also has a industry. You can look at their industry pretty quickly and see how it moved with the industry, and key stats and ratios that are down here. You can see all of those, net profit margin, etc. Not just looking at the market prices ones we've been looking at. You can also use this to screen stocks that are similar to Apple if you want to see how they've done. So some similar companies, not based on the industry per se, but based off of similar comparisons. So similar PE ratios, similar dividend yield, or whatever we're looking at here. So very powerful tool. Another one that I highly, highly recommend is MarketWatch. MarketWatch is a very quick way to do a report. If you look at the overview, all of these buttons up on top, you get the stock price, and you can look over different time periods. You can see where the sentiment is. Basically, right now, it looks fairly negative, fairly bearish. You see, let me highlight that right there. So you see this here. You also can set the different time periods here if you want to. You get the quick recap over here with market caps off to the left, volume, PE ratios, etc. And you get news stories. So all of the news you want, you get news stories here and news press releases down here. So there's quite a bit you can get at. The other thing I like about this, and I like very much, let me erase these. The other thing is that you can go to other tabs on this and get a lot more information. That's why I think MarketWatch, in some ways, is a little easier to use, I think. If we go, let's go back up to the top, and let's go to Profile. And here you have the profile of Apple. You see all of the returns. And here we have ratios broken down into the types of ratios that we talk about often in class. The valuation ones, so example, PE ratios, PEG ratios, etc., EBITDA ratios. The profitability, gross margin, operating margin, return on assets, etc. The efficiency, revenue per employee, turnover ratios, etc. The capital structure, long-term solvency, we sometimes call those. Down here we have such things as debt to equity, debt to total assets, etc. And finally, liquidity ratios. How likely are they going to be able to make their payments? So all of them at a very, very fast glance. They also have links through. You can look at the annual report or the SEC filings. So MarketWatch is a quick one to use. Another good one to use, especially if you want a little more trading data, is Seeking Alpha. A lot of news stories here. You can get the normal headline stuff, but then you can also go to into market currents, and you can get all the news that's going on there. You can get stock talk if you want to see what other people are saying about it. It gets all the Twitter feeds based off of the stock, so you get a little background, see what's going on in real time. So those are some of the ones. Just to go through, we looked at finance.yahoo.com. We looked at Bloomberg.com. We looked at Morningstar. We looked at Wolfram Alpha. We looked at Google Finance. We looked at Seeking Alpha. And we looked at Morningstar. And MarketWatch too. So those are some of the ones. Highly recommend them. There's many other free ones available as well. But that's a good starting point. And if you want more information, just come to class.